Futures and options on futures trading involve substantial risk and is not a suitable investment for all types of investors. Past results are not necessarily indicative of future results. When I use the word I in this video, it refers to what I teach in my charting course or what I offer in my twice daily oral and written updates. Prices shown on charts and quote boards are in real time and take into account all known activity up to this point in time. And if you'd like to read more of this disclaimer, simply hit the pause key on your video player. Good afternoon. Ira Epstein of Glynn & Associates with your agriculture update for this Thursday afternoon, and this is the 2nd of March 2017, getting on to around 2:10 p.m. Central Standard Time. All right, if you look behind me, it's pretty much a sea of red. The soft commodities, cocoa, coffee, sugar, they were the markets that were up along with the U.S. dollar. But as I stand back from there, it's just all red, so a down day. Is it that important? Well, it is, because we've had corrections. You've certainly broken the back of, let's look at the gold and the silver. They've certainly got hurt pretty hard. Copper down 5 cents. You were down $30 in platinum. These aren't small breaks. And you're also adding more to the interest rate cycle of people thinking the Fed is going to move in March. But what does it mean for the agriculture products becomes part of the question. So let's go there. As you can see on a weekly chart, you're still up 13 cents for the week in the May soybean. So not bad action so far. You can see that you've had a nice rally from 1022. You got into the 1050s, and all of a sudden you're back down here into the 1037 area on a closing basis. When we look at a regular bar chart, what's happened is you now have a pattern of lower highs and lower lows. That is bearish. We then look to see where the market's at in relation to moving averages, and we're back into this old area that we've got of the 18-day average and the 100. So it's bouncing between the two, but the market is in the bear camp at this point in time. To get into the bull camp, you need to do two things. You've got to get over 1056 1/4 on the current chart pattern and close over 1047. Hasn't done that. If the market gives ground at the 100-day average of closes, which is 1032, it might sink back to the lower Bollinger Band of 1015. When we look at momentum, the market on this rally has been able to get away from an oversold condition. So what do we have? We have downside bias, momentum basically flat right here, not pointing down, flat to trying to come up a bit, and the swing line is down. The bears own the day, but this is a support area, and your resistance 1047. In the meal market, new bearishness hit the market today. Now with the outside day down, you have lower highs, lower lows. If you look at today's low, it was 331.50. See this right here? Look at the Bollinger Band, 331.60. So the market went down there, let the bears out if they wanted to come out there off the sideways action that the Bollinger Bands are throwing in an oversold condition. But the bears rule the day here. If we take a look at soybean oil, it's markedly stronger than the meal. But remember, this had been a market that's been in a collapse all the way starting back here in December. And to get a good-sized bounce as you unwind these spreads, not much of a problem. What else? We still don't know the truth. How is that? For what's going on with the RIN credits, and are they going to switch in the production of biofuel to taking it away from the refinery and putting the burden more on the end user? While there's been denials out of the Trump camp, we're not hearing any denials out of the associations that claim they spoke directly with the Trump administration this week. And this market's certainly not giving up much of that. I believe where there's this much smoke, there's fire. I would still be thinking this market acts more bullish than bearish at this point. In the corn market, you've got yourself now a pattern of higher lows and higher highs. So the bull market has come alive again. The bears will probably try to get you under 372, and the bulls will buy the market, I think, around that 18-day average and not want to see prices get under that 372. If they can get prices to rally, look for the 386 3/4 zone at the upper Bollinger Band as one of the potential targets. When we come to the May Chicago wheat, the market got up just high enough today to knock out the 459 level. So you're no longer in a downtrend. What you have now is a market with lower highs up to that point, now a higher high and a lower low. So we don't have a pattern. We have the higher high, the lower low, and guess where the market is stuck? Right on that line in the sand, the 18-day average, as it's saying, guys, why not wait and let's see what the trend turns out to be. I've been issuing warning signals that we've come down to this lower Bollinger Band. We're finding support in an oversold condition. Now, if you get my twice daily updates, you know I've been talking about that, but certainly in my morning subscriber videos, which you need a user ID and a password to get into, that is what I was saying, and I said it again today. This is where I think the pros are covering shorts, and lo and behold, the market's staying in an oversold area, got up high enough today to take out the previous high, so you end up with a funny pattern. You got a double bottom at 1910 and a higher high. I don't know what you do with anything like that. The bias is down. I think you're trendless in the market. Coffee, same thing. You rallied yesterday off the lower Bollinger Band as you've tried to hold it 3 days in a row. Today's rally didn't quite get it to the 18-day average, but you can see what it's trying to challenge. What do we have in the way of a trend? None. We have a higher high from here to that one, a low that's under the recent low, and we're trying to make a move back to the 18-day average of closes. In the cocoa market, one more time, we've gone down to the lower Bollinger Band and we're getting a bounce. It's not a trend change. Market is very oversold. I happen to think the pros, if they can drive it down to these Bollinger Bands, they're starting to take money off the table, but I don't think that you've scared them to the point where they're not going to sell it at 1979. One of these times it'll get up close over that and take out a previous number like 2034, and maybe you'll end this bear trend again if you can close over that 18-day average. You haven't done it. So the bears are still controlling it, and they see the numbers. Now, in the cotton market, cotton got up early to the upper Bollinger Band and then collapsed later in the day right down to the 18-day average. It is a question if it's still a buy. I think it is, but I'm not certain. Why? Well, you've got the higher lows, higher highs. That's all good. You got up to your Bollinger Band. Too much for the market, pulled back. But momentum is wandering. It's not pointing up here. It's just sort of drifting. This market's looking for direction. In the cattle market, overbought, hit the upper Bollinger Band yesterday, the day before, immediately correcting away from that. And in the feeder cattle, you reinstated the bear trend today. Lower highs, you've had the lower lows, so objective 121.40s right through here, resistance 123.73, and until you take out 125.25, the bears, because momentum is pointing down, they rule the day. The hog market got right on up, challenged, as you can see, the 18-day average zone and failed today. Now, is it going to be able to get back up? There's the question. You have a pattern of higher lows and higher highs, but you've stayed under the 18-day average. That means you're void of trend. So you put it all together, a pretty nasty day. I just got off the TV in Australia. And, you know, it's always nice when you talk abroad because I'm on TV, be it Japan, Australia, Canada. I do it all over the world. And make a long story short, you know, they were asking about our stock market. And I went into what I told them what scares me. You know, back in the 1950 to 54 roughly, we had Mr. McCarthy. Mr. Schumer sounds like Mr. McCarthy. Everywhere we look, there's a Russian. I mean, they're in Jeff Sessions, they're in Mike Flynn, they're in Trump's finances, Trump's businesses. I can go on and on and on. Is it true? I don't know. But if you removed the word commie with Russian, are we getting to something like that? I'd hate to see that that is the case. So when I wrote in my newsletter, I said, this is politics at its absolute worst. Forget your Republican, forget your Democrat. Folks, they're supposed to serve us, not do this type of open battling, and it looks like nothing's getting done. So yeah, that could weigh on the stock market for a bit, but if this is all you're breaking after the Tuesday speech that we heard to the joint sessions, not much of a break in the market. On the other hand, the markets are also considering where they're looking at for the interest rate hike on the 14th and 15th FOMC meeting on the 15th, maybe the announcement then. I write about this and I explain my points of view, and believe me, politics is not the thing that is my foray, and you can say, you better be right, Ira, it's not yours, and I can live with that. But what is my foray and what I do for a living is I teach, and I teach a lot of trading. And I give videos in the morning and I explain what I see from the night before's wrecks that I might make, or from when I get in the morning. Remember, I wake up 4 or 5 in the morning. I'm scouring the markets, giving you ideas that might work there. They're specific. They don't say, well, gee, I like the long side, I like the short side. They're way more than that. And my commentary is right on the money as I see it. And I will write what I think is impacting the financial markets. And yeah, just as an example, I don't want to see this McCarthyism go through the markets. Not a good thing for the business climate, for the American climate. So I'll say that, but from a point of view of finance. So what I'd like to do is either give you a free 20-day trial. If you've had the trial, write this down. Go to our website, www.iraepstein.com. Go into subscribe to the research. You're going to use the code, capital IRA, all caps, IRA 20. You're going to get $20 off your subscription. So if you'd like to take advantage of it, it's there. If you've not tried my information, free 20-day chart on that, 20 days access, not chart, of that. You can click up here. You can go to our form if you want to get the research. But remember, if you're going to buy it, just go to our website, www.iraepstein.com, go into research. This is all going to end tomorrow on Friday. So if you think I'm going to keep offering it, I'm not. It's going to end tomorrow. So take advantage of that IRA 20. You have a great day, and I'll talk to you all later today in my other videos.